We're in an early stage of a bull market here, and I think it's going to continue to grow.
This is Jay Martin.
Michael, it's good to have you back in the studio.
Very happy to be here, Jay.
Okay, so I want to jump back into the story. Last I spoke to you in this capacity, I think was about 6 months ago, but I saw you in Florida at Rick Rule's conference in Boca. Phenomenal show, by the way. I hadn't been to his event since it was in Vancouver. I hadn't made the trip down to Florida, but I'm not going to miss it again. And it was such a productive few days. However, I was blown away by the fact that it's a 4-day conference and I still didn't get to talk to everybody that I wanted to talk to. And I think that's just a consequence of how busy it was. How would you interpret, I mean, you're on the road a lot. You were there. How would you interpret investor sentiment right now relative to previous little rallies we've had in the precious metals cycle? How do you interpret this bull market, the health of it, the longevity? What are you watching? What's catching your attention?
Yeah, well, it's fundamentally different now. It feels like we have a real market. You know, we've had, I'm old enough to remember the 9-month bull market of 2020.
Me too.
And as well as the 9-month bull market of 2016 as well. So,
that's right.
Both of those were exciting. A lot of money was raised for good exploration programs and good development companies and things like that. What we're seeing now, I think, is a step change where we're having sustained higher precious metals prices, and that's driving a lot of interest. And it's a fundamental change on how fiat money is being valued, and the debt situation of the United States and the global economy as well as the shifting of demand for gold to the BRIC nations. And we're starting to see, I think, truly a change in those dynamics. Making a big difference, and we're starting to see a larger and more diverse group of individuals attracted to the market, and I think that's what signifies that we're in an early stage of a bull market here, and I think it's going to continue to continue to grow.
Because that 2020 market that you referenced, and you called it a 9-month market, and that's right. And I remember the industry shifted, like the entire sector was shot out of a cannon. And all of a sudden, physical gold, best-in-class miners, down to explorers, were seeing massive rallying in their share price very, very quickly. Like in a matter of weeks, it felt like, or maybe that's hindsight, simplifying things, but this market's been very slow, methodical, and I feel like logical in that we saw the gold price, start to run a couple of years ago, really 2024, things started hitting all-time highs, then best-in-class royalties, then best-in-class miners, then mid-tiers, and the trickle-down of capital has been, a lot of investors, it's made them impatient if they're waiting for the junior explorers to really pop, and they haven't yet, but I'd call that a healthy market. Like, this seems like textbook bull market unfolding. What do you think?
Yeah, I agree. And I think that order of operations is correct. You see the royalty companies, because they have less risk, moving first. Then it's the tier one majors. Companies like Agnico have performed extremely well. And when you see these quarter after quarter cash flow growth and profitability increases, that brings in the larger scale generalist investor, and some people that may put a zero, they may have had a zero allocation, that may go to 1 or 2% allocation in their funds, and they're talking very big funds. But as that happens, it becomes more topical. Then you start to see smaller funds and different groups allocate more towards these metals. And as that continues to saturate, you start to see groups looking for opportunities a little bit further downstream or earlier stage, like exploration companies. Doesn't feel like we've seen that yet. That's what leads me to believe that we're in an early stage of this bull market. What we have seen is a lot of interest, but it's not like it's gone absolutely crazy for large scale gold producers yet. Those still feel early, but we're starting to see some of the more high quality exploration companies in the silver and gold space, pick up a lot and get a fair amount of interest. Now, as that pertains to Vizsla Silver, we've seen a very significant change in our shareholder database now and the list of shareholders. We've seen index funds, ETFs, big, large-scale American equity investors coming in to our name.
Mhm.
And I relate that to a couple of things. One, of course, we're best-in-class silver developer, soon to be a very large-scale producer of silver and gold, but also transactions in the space. In the last 18 months, we've seen pretty much all of our peers, single-asset silver primary producers, most of them in Mexico, be acquired. And so you see a rotation of shareholders out of those single-asset companies into the next in line, which is Vizsla Silver. So in the last 9 months, to be exact here, it's been a very interesting transition of shareholders in Vizsla Silver, and we see them add quarter after quarter as well. So we are seeing it happen in real time, and it's very exciting for us.
Yeah, and that cycle of capital occurs because some upside is realized at one stage in the market, and investors say, "Okay, what's next?" And they go down the food chain sequentially like that.
Mm-hmm.
And every market cycle, I feel, outside of precious metals as well, unfolds in a very similar way. The core pillar idea, begins to rally. Some folks make money, and then they look for what's next and look down. And this is how the crypto rallies have occurred. Bitcoin will run, and the what's next opportunities follow suit. So if we were to look at the stage in the sector that's attracting capital right now, and you referenced your company, Vizsla Silver, largest undeveloped silver project in the world, and I believe the potential to become one of the world's best silver miners, and we're going to find out in the near term because you're moving forward there. I put you in, like, if I were to say, producers and then developers, but then there's funded developers and unfunded developers. Vizsla is kind of like a semi-funded developer at this point, right? Is that fair?
Yeah, moving very rapidly towards being fully funded.
Okay.
It's been my goal and my focus driving the company that we never get into the position of being underfunded.
Yes.
And that's a terrible situation to be in. I've had those experiences in the past, and that's shaped how we operate. And we've made sure to have a very strong balance sheet. So what we have now is over $200 million US in the bank. Important to note, our capex, as described by the PEA, is about $224 million US. So we have almost our entire capex, as per the PEA, in our bank accounts right now. We also have about $30 million worth of Vizsla royalty shares, and we're also working on debt, basically, to fund the next stage of development here. And I think that in the coming months, you'll see that Vizsla Silver will be in a much stronger position financially in order to unlock the value that we see at the project. And that'll come, at the same time as we're putting out our feasibility study, really moving this project forward very, very quickly into production and being in possibly the best financial shape that I can think of for any developer out there.
Let's unpack that a little bit. So according to the PEA, the capex to build the mine in your Mexico project would be around $224 million. That's the PEA estimate. Right now, you've got $200 million US in the bank. You're also sitting on 30 million shares of Vizsla royalty. And this is a company that you've openly discussed taking to market, right, in the near term.
Exactly. So Vizsla royalty is a very important part of our strategy. So we ended up spinning out a package of royalties on the Panuco project, our original Panuco project, to Vizsla Silver shareholders. Vizsla Silver, in addition, owns 17% of that company. We see that there's a very clear line of sight to selling the company in the near term.
Vizsla royalty.
Yeah. And that will help fund Vizsla Silver's construction. And analysts are predicting, north of $6 a share. This is not our numbers internally, but, today we traded about $3 a share Canadian. So there's a lot of room for Vizsla royalty to increase. And any transaction that we undertake with Vizsla royalty will directly benefit Vizsla Silver and allow us to basically use non-dilutive financing to help the construction of the project and get into cash flow very quickly.
Okay. So on the ground right now at Panuco, the resource is like 360 million ounces of silver equivalents, 220 which is in the M&I category. Yes. Mm-hmm. Test mine is up and running, right? So walk us through like near-term catalysts and timeline. What's going on?
Yeah, and of course our global resource is, like you said, 360 million ounces of silver equivalent. The M&I 222, I believe, very high grade. It's the highest grade, development silver project out there of any scale. Right now we have the underground test mine going. It's incredible. I was just there a few weeks ago. This is an extremely well done underground mine. It's going to be our permanent entrance to the Copala vein.
Okay.
And so our goal is to get to the Copala vein through this underground mine, de-risk the project by putting that permanent entrance in before we even start constructing the mill, take material above surface, stockpile it, have it there so that when the mill is started up, we'll have material sitting there ready to run through that mill. Another reason that we do that is to decouple the two startup risks. So when you have an underground mine, you have startup risk of the underground mine. We've gone through the kinks and the issues and the contractor problems and things like that. We're dealing with this now when there's no time pressure. And then when we start the construction of the mill, invariably something will go wrong, whether it's, at the very beginning of starting the mill, there's always little problems that you have to deal with. So it's much better to deal with one at a time, i.e., the mill when we construct the mill and having already dealt with all the issues of the underground mine. And now we're getting 2 blasts a day. It's moving very, very smoothly at the project. And we don't have that time pressure of a hungry mill waiting there for feed. So it's a very intelligent way of approaching the startup of a mine and a mill, and one that I think shareholders should be very happy with because, first of all, we're obviously fully funded to do this underground mine. It's only about $10 million, and it's given us a huge head start. We permitted it early. We're going to have that permanent entrance there, and then we can just focus on starting up the mill when we get those construction permits for the mill. So it's very exciting. Another thing to kind of note, going back to your original point about the resource, is that this resource is going to grow. We are going to drill from underground. We're going to continue to expand this resource. The resource, all of those wireframes and all those veins are open along strike. And if they weren't at surface, I would say they're open in every direction, but they're open at depth. They come right up to surface there, and then they're open along strike. There's going to be a lot more low-hanging fruit for us to continue to grow. We've done some internal studies around that, and we see, a major increase in mine life going forward just from some low-hanging fruit expansion along these veins.
Okay. Can we pull on that a little bit? Expansion of mine life. We're still forecasting 2027 production. For anybody who's just walking in for the first time, what are initial estimates showing, Michael, annual production and expected mine life at this point in time? And I know you're completing a feasibility study right now, so we'll get more information in the near future, but what can you share today?
So right now, the life of mine average annual production is about 15 million ounces as per the PEA for 10 years. Now, you notice that's about 150, 160 million ounces of silver equivalent, which is about less than half of our global resource. So we've only included what could really be mined very, very readily and what could be converted to the M&I categories. That's why I say this will continue to grow. So there's basically double the resources that are in the mine plan in terms of global resources on the property. And again, once you're underground, you can start to mine different areas, you find different veins, it continues to grow and expand. But if we're looking at just that initial mine plan, it's about 15 million ounces per year for 10 years.
Okay.
With the first 2 years of the PEA being 20 million ounces. Now, we've done a lot of work and a lot of drilling since that PEA, and we put our updated resource together. That's going into the mine plan. The feasibility will be based on a much more improved resource and mine plan. So I actually would think that we'll see an increase in those overall ounces produced, as well as perhaps a higher production profile for the earlier years. It's going to be really exciting to see the feasibility study. One of the things that we set out to do, which a lot of companies don't do or don't actually complete on, is we wanted to show that we weren't going backwards from the PEA into the feasibility study, meaning a higher CapEx, lower mine life, lower produced ounces, those types of things, worse economics. What I suspect will be the case is that we should be in line with the PEA, if not better in some areas. So usually the feasibility study is a disappointment. I'm hoping that the feasibility study will be actually a positive surprise for the market here.
Okay, let me ask you a question. Today, you're sitting on what is probably the largest undeveloped silver resource in the world. You have $200 million in the bank. You have an option to raise more capital without dilution in a couple different directions, either through Vizsla royalty or some debt. You're in an incredible position of strength, and the market has arrived, right? Like timing looks really, really good for you. overnight success, right? And that's actually what I want to ask about, because I know that when you started this company, there was a period of time where you were effectively financing large pieces of it, whether that was employees' salaries or office expense on a personal credit card. I want to get back to that. Walk the audience through what year was that, and just bring us into the room a little bit, Michael.
Yeah, so I incorporated the company in 2017. We took it public in the early fall of 2018, and we started to go down to Mexico and work on consolidating these projects. And by then the company had basically run out of money, and for the geological expenses that we're doing, the consulting, the trips, the flights, the office space, the corporate, all that was basically, covered, via line of credit and credit cards for a period of time. And I carried that debt. We ended up financing after, and I carried that debt for some time because I just wanted to make sure the company was in great shape. Again, going back to that idea of never being underfunded, and the enemy of a junior mining company with no revenue is running out of money. That's the ultimate failure, right? So we wanted to make sure that the company was in good shape. So I took that on, and it didn't occur to me that that was overly risky at the time. I was pretty confident that what we have here could turn out to be something really special. So it was thinking back to those days, I think about that fondly. It was a lot of fun. It was really exciting. We didn't know what was around the next corner. And when we first made that discovery, it was kind of an out of body experience. It was such a thrill. And I think, you end up kind of chasing that thrill again in the future. And, thinking about what's out there in our district and these other projects that we bought in Sinaloa, I think we're very excited to see about, how do we make another discovery like Copala, like Napoleon again? But again, those were really fun early days, and that kind of make it or break it startup.
Yeah, no doubt. I got to ask, what gave you the conviction? 2017, 2018, we were on the heels of a 7-year bear market, right? Companies had been destroyed, wealth had been destroyed. It was very hard to raise money for anybody, probably yourself included with Vizsla at that moment in history. What gave you the conviction to double down personally and pursue this?
Well, I think it actually, to be honest, what gave me the conviction was seeing my business partner, Craig Perry's face when we were driving through the property for the first time.
Okay.
He's a legendary, he's a legend. He's a legendary geologist. He's an incredible business person. And, I'm not a geologist, but we were driving through the property the first time, and just his reactions to see how he responded to what he saw there, kind of the surface expression of the geology. We went underground and toured underground mines, and they were just, Craig and other geologists were just blown away. And I thought, this will probably be the best chance here, of anything for Vizsla. We gotta get this no matter what. And so we came back from that trip, discussed it, and I basically stopped at nothing to get it and put it all together. And I spent better part of a year down there in Sinaloa, Mexico, and working with the families and these types of things. And, it was a lot of fun. It's easy to look back now and say, hey, overnight success, or, that was a smart decision or something like that. But we really had no idea. There's a huge amount of risk. And, the funny part was I felt relieved when we signed the agreements, but the real work had started at that point, because it was when we had to go raise $42 million US, and everyone thought we were crazy.
When was this?
This was, we signed the agreement in late 2019.
Okay.
And the agreement said that, basically to acquire the property, we needed to pay it was $43 million over the period of about 6 years. So we would go and market and talk to people in Toronto and in New York, and some cases I was laughed out of offices. How is this little company, $20 million market cap?
Sure.
How are you going to raise, that's 20 million Canadian. How are you going to raise $43 million US?
Yeah.
It doesn't even have a resource. There's no discovery. What are you guys thinking?
Yeah.
So, well, we knew that if we did make a discovery, the infrastructure, the production facilities there, the head start that we would have to move towards production would pay off. And my conviction was that markets are cyclical. The best time to do these deals are when, people are disinterested in metals. And, it felt like the right thing to do was kind of be counter-cyclical. And now we're, what's that, 6-7 years later, we're reaping the rewards.
Definitely the best time to do deals is in that part of the cycle, but also the hardest time to do deals. It's the hardest time to get people to part with their money for an idea that's out of favor. You were a $20 million Canadian market cap company. Walk me through the pitch at this point. Like, how are you getting, because, when you're sitting down and you're telling a story and you're explaining the value proposition to somebody, typically there's a moment where you see the eyebrows go up and you're like, that's it. That's what's getting people excited about this.
Yeah.
Was it the people, yourself and Craig, your partner? Was it the geology? What was it? What was that moment?
Well, certainly Craig and Simon, was a director, is now our chief operating officer, was the COO of Ausenco, and Craig with his track record of success, NextGen and ISO Energy, time at Rio Tinto, Tiger's Realm, EMR Capital, and now Skina has become a knockout success as well. That was a huge part of it. People took a flyer because of Craig's conviction on it as well. And
was that part of your strategy? Because I imagine we're about the same age, so I know how old you would have been in 2017.
Yeah.
Was that part of the strategy for you personally and professionally to partner with one of those existing legends, right? And bring a bunch of hard work and value to their reputation.
And that's how Craig and I kicked off our relationship originally, is we built a cobalt company. Well, he basically backed me to do that. And I had all these ideas, and I think he was quite impressed by the speed and the aggressiveness that I brought towards that. And financially, we both, we all did extremely well out of that. And so I think he was happy and willing to let me hitch my wagon, and see what else I could do. And but certainly, I think if you're a young person in the business, it's important to find mentorship in established professionals, people that have done it before. It's like that in any industry, right? You learn from people that have done it, and that's how it started. It was early on. I was in dire need of good mentorship, and Simon and Craig were there for me. And as these things progress, they often turn into business opportunities, and so we all work together on Vizsla Silver, and it's incredible. It's always great to just think about how far we came from early on.
No doubt. And you founded Inventa Capital, which is, how would you explain Inventa Capital to somebody who's never heard of it before, Michael?
Yeah, it's funny at the Rick Rule conference. I every year I get up and talk about Inventa Capital and what we do, and this year I actually just ran through the history of Vizsla Silver, much like we just discussed here, and way that I explain it, and oftentimes people will come up to us and say, "Oh, can I invest in Inventa Capital? Where's the fund? Is it a fund?"
Sure. Yeah.
It's not a fund. It's an incubator. It's a private company that we do a few things. We share office space, so companies have a really easy way of starting up. It's kind of like a startup incubator. We share resources like accountants and corporate secretaries and geologists and things like that. So, your barrier to entry is quite low if you have a concept and an idea. And, we try to find really strong, young entrepreneurs and help them build their businesses. So the same way that Craig mentored me and helped me early on, we try to do that as well. And early on, we spread ourselves a bit too thin. We did a lot of deals and, took a lot of risks that probably didn't make sense looking back. Nowadays, the approach is really just to find someone that's probably missing something, someone that's got a great concept, great idea. Good example of that is Keith Bodnarchuk with Kosa Uranium.
Mm-hmm.
And, they're an all-star team, an award-winning team of exploration geologists in the Athabasca Basin, actually the same team that Craig made the ISO discovery with. And Keith wanted to build this company. He had all, he did it all himself, but, we were able to offer him kind of, a bit of a head start, a tap into our capital markets networks, our investors, investor relations work, that type of thing. And, I think a company that's coming to Inventa Capital knows that, we can help raise the money, we can help support it. And again, to my earlier point, make sure they never really run out of money, which is the ultimate threat.
Yes.
And at the same time, it's a really collaborative, fun place where people all work together and we share ideas and try to build companies.
Yeah, I think it's such a valuable structure for the reasons you just mentioned. You can pool resources and therefore cut costs. And yes, all the stuff like office expense, accounting, and legal. You can access each other's capital networks. Often the most scarce resource in the resource business is cash. And so if you can pool networks together, assist each other raising capital when that time comes. And then also, you must do this internally. You can workshop problems together, right? You're going through something at Vizsla Silver. Craig's going through something with Vizsla Copper, whatever that is, and you can borrow each other's brain capital to solve problems. Do you bring issues and items to the table like that and kind of boardroom to find solutions?
Absolutely. Yeah. And we call kind of huddle, and we have our weekly calls and things like that with across the group. And, and the best part about that is, with the money that we're saving across the companies, more of that's going into the ground to make new discoveries. And so, sometimes, they're not just corporate problems that we solve, but also technical problems. And we have a real strong brain trust of people that all get together. And, any number of I'm a large shareholder of all of our Inventa Capital companies. But they certainly have an advantage over your standard issue Vancouver junior.
Yeah. 100%.
Yeah.
100%. And that's, okay. So looking forward, Vizsla Silver right now, anybody who's like, what's next? Effectively, we're looking for the feasibility study to come out of the Panuco project, right? And get a bit more clarity on what that looks like. I'm curious about what you're going to do for the next leg of your funding. And you have like 3 options you could do there, right? You've got the Vizsla royalty sale, if that occurs, and for what valuation. There's a chunk of capital there. You could obviously look at debt. I think companies can often finance at like a 3-to-1 ratio. You've got $200 million US in the bank already. Your capex is 224. You're almost there, right? And you could do an equity raise should you decide to do so. Is that a fair assessment of your 3 avenues to fulfill the rest of that capital need? And do you have a preference which direction you might want to go?
Yeah, and we've been extremely diligent in finding the next path here. And as I said, in the coming weeks and months, we should have some news out about this. What I can say, I probably shouldn't say too much, but what I can say is we've exhausted all the various avenues, and of course we've spun out our own royalty, but there's also the streaming royalty model that we've reviewed and looked at as well, which at face value has very attractive cost of capital.
Yeah.
Debt, for a project like this can have a very attractive cost of capital. And the advantage there is that it's a temporary encumbrance. It's a liability, but it's something that you can pay off when you're in cash flow. And
it's non-dilutive.
Exactly. And, just for the numbers, just to think about our cash flow and payback period, as of the PEA, it was a 9-month payback period. Currently, it's probably somewhere less. Certainly much less than 6-month payback period. If you think about 20 million ounces, we're at $40 an ounce now. $10, let's say ASIC, just to be really generous and round up.
Yeah.
That's $30 margin times 20 is $600 million a year of cash flow there, basically. And you think about the capex. So you think about debt. It's something that you can pay back very rapidly. And I think that has a lot of advantages to it as well. And of course, equity, we're trading at about 0.6, 0.7 net asset value. So we're trading at a discount to what we believe is our intrinsic value. Now that net asset value is going to continue to increase as we move closer to production, as will the multiple. So I think, peer companies like ours that have gone through this path in Mexico before have traded at a sometimes very serious premium to net asset value, trading upwards of 2 times NAV before production even. So, we're trading at a discount to what our peers traded at and to what we think our true value is, which would be 1 times NAV. Actually, that's less than what we think it is, but in terms of the analyst consensus.
Sure.
So it doesn't make sense for us necessarily to raise more equity at these discounted levels. So, I think the shareholder, the investor should be able to see kind of which path we take in the coming days here. So stay tuned for that.
Okay. Yeah. 100% will do. Man, I always enjoy catching up with you, and I'm really glad we were able to dial it back to the earliest days today, because it's easy to look at Vizsla Silver today. I really appreciate the origin story just because I think it speaks to the culture inside the organization. We get a sense of what you're made of, right? Like, would you do anything? Would you do whatever it takes, right? And I think you proved that at the earliest stage before anybody else had conviction in Vizsla, and you were making these big personal bets to get this thing moving, right? And I just think it speaks to the character and the durability that entrepreneurs need to succeed, you know? And you came up in conversation on my podcast recently, and we were just talking about like, who are the next entrepreneurs to watch? And this is a very common conversation that we have in the industry. We all know the Lucas Lundins, the Ross Beatties, the Bob Quartermains, the Thomas Kaplans, but who's next is like, that's my job. If I had like one purpose in this industry, right, is to find those people. And quite frankly, it's hard to do that when you go through an 11-year bear market, because you can get hints and you can have a pretty good idea, but you really need a bit of a market to stress test that, right? And now we're getting that. And, you know, the ingredients that I think people should look for is the durability. I mean, every entrepreneur knows you need a plan C, because plan A and B are probably going to fail, right? Do you have the energy and durability to get back up and keep swinging and do whatever it takes, right? And that's why I like to get into the origin story. Have you been very creative and aggressive with your capital networks, right? And I reflect on the time you spent. I mean, you've traveled with your family to spend 6 months in New York just to develop capital relationships. You've done this a few times to ensure that you've always got optionality when you have to go back to the market for capital. The more options you have, the better cost of capital you're going to get, right? Because you can truly go to market. If you have one or two sources, you're going to get grilled, of course, right? And have you developed mentorship relationships that contribute both brain capital and experience, but also additional capital networks, right? Back to that. And, you know, you tick all those three boxes. And then the most important one, that there's now a track record of many years of you doing exactly what you said you were going to do, right? And that in itself is an anomaly in our industry, right? There's a lot of cowboys, a lot of short-term thinkers, a lot of short-term commitments. And, you know, you've very clearly proven that's not you. And, you know, congratulations, because the results speak for themselves. So, you know, it is what it is. But I just wanted to share that with you, that you've come up many times in that conversation on my show. And I feel very confident putting an entrepreneur like you in front of our audience, because I'm like, he's a good steward of capital. Your money's in good hands with this CEO. So it's always good catching up with you, brother.
Well, I'm humbled to hear that. I really appreciate that. So thank you very much. And I always look forward to this every well, I was going to say every year, but I think we do it a little bit more frequent than that. But I look forward to these meetings. So thank you very much.
Pleasure's all mine.